Diversification isn't what you think, right? We'll talk a little bit about diversifying between asset managers as well. That's not diversification in a lot of cases. This is why you want to pay attention to how markets are performing. Just holding a bucket of assets across boards doesn't necessarily lead to better outcomes. Okay, let's talk a little bit about what you need to know before the bell this morning. We're going to do a trip around markets this morning, kind of a few interesting things that are going on. Let's start with the S&P, of course, back on a buy signal, overbought here short term. But markets get a little bit deviated from the 50-day moving average. Take a little profit here. As we talked about before, we're about to hit mutual fund distributions. So take a little bit of profit here, rebalance your risk, let the market kind of work through this kind of overbought condition here temporarily, and then you get a better entry point to add exposure to your portfolio before the kind of the year-end rally. Small mid caps have certainly been kind of in the news as of late, have had a sharp rally. And that always gets people very excited, particularly when things come back up, from where they are. But the problem is that for somebody who's just been holding the Russell 2000, you are now back to where you were 3 years ago, almost 3 years ago. January will be 3 years. So again, this is part of the investing problem. Well, the S&P's made 54 new highs this year. And again has continued to grow. We're up 26, almost 27% for the year so far. IWM has done fine, but again, for a lot of people who've been long-term holders in allocated portfolios, right? I own some large cap, mid cap, small cap, right? You've had a chunk of your portfolio go nowhere basically for 3 years, and you're just kind of getting back to even after 3 years. So this is why it's always important is, these ideas of diversification, and I think this is a good topic maybe John and I will address this morning. Diversification isn't what you think, right? We'll talk a little bit about diversifying between asset managers as well. That's not diversification in a lot of cases. But again, this is why you want to pay attention to how markets are performing. Just holding a bucket of assets across boards doesn't necessarily lead to better outcomes. Jumping over to Bitcoin, been interesting. Bitcoin's been in the headlines a lot as of late. Got very close to the 100,000 mark on Bitcoin, and since then has triggered a sell signal, working off its overbought condition. Not really going anywhere as of late, but sitting on the 20-day moving average, which is extremely elevated. The one thing to really pay attention to with cryptocurrencies is that we are extremely deviated from these longer-term moving averages. And again, these longer-term moving averages are going to play important roles at some point here. So again, there's a real risk. If we take out this 20-day moving average, you could see a pullback to the low 80,000 level on Bitcoin here pretty quick, just to come down and retest the 50-day moving average, which is going to happen. And again, it happens on a regular and consistent basis over time in all assets. Just remember that moving averages are like gravity. So you can have all your theses in the world why Bitcoin's going to go to 1 million, and maybe it will. It's just not going to go straight up there. So again, just like every other asset, you're going to have pullbacks. So again, kind of take profits, rebalance risk as you need. When it pulls back, buy some more, and you'll be fine. Gold has also been kind of working through a consolidation process as of late. And again, this kind of corresponds with what's going on with the dollar. Gold peaked back in early November, has been kind of working this off, has taken out a couple of moving averages here. It's currently wrestling with the 50-day moving average, held support at the 100-day. That's good. Working off some of that previous overbought condition and kind of that momentum run that it had. So might be a little bit longer here to consolidate before it makes a move higher. One thing to just pay attention to is that 100-day moving average, which is currently sitting around 2,500. You take that out, you're going to probably be in the low 2,300s pretty quick. So again, just kind of watch that support level if you're long gold. Outside that, of course, gold's trading very closely against the dollar, which has, after the election of Trump, we had a strong rally in the dollar. Got extremely overbought. We talked about this on the show. Need to have a bit of a pullback. You're on a sell signal working off that overbought condition. That's also kind of what's weighing on gold here as of late, is that dollar decline. So again, just kind of pay attention to what happens here with the dollar. That'll feed over into other commodities as well. But again, overall, everything's really kind of just doing well. Things got overbought. They're consolidating, giving you an opportunity to pick some things up. Don't forget to rebalance risk on things that are extremely overbought, like the market, because you'll have a better opportunity to add some exposure there as well. There you go. That's what you need to know before the bell this morning.